Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to have the opportunity to address such a distinguished audience. If you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry, with the phone number is +8491 4326556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this channel is Areca Hồng Nguyen. She's a personal financial advisor. You can contact her with the email hong.nguyen@bcsc.com.vn, with the phone number is +8491 4326556. We always welcome you to our office on the 11th floor, 109 Trinh Đạo Street, Hoàng Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about GVR, Vietnam Rubber Group, and its associates manage a large land bank of more than 490,000 hectares, 80% of which is rubber plantations across Vietnam, Cambodia, and Laos. GVR's core businesses include natural rubber, rubber products, industrial parts, and wood processing. As you can see on the screen, this is the report which was collected by Viet Capital Securities about GVR on the 29th November 2022, with the current price is 14,150 Vietnam dong. Target price 16,300 Vietnam dong. Previous target price 27,600 Vietnam dong. Lower valuation to reflect slower land conversion outlook. We maintain our outperform rating for GVR despite cutting our target price by 41% to 16,300 Vietnam dong per share. Our lower target price is mainly driven by 1. Our 3.2 kpt higher WACC assumption and our more conservative valuation for GVR's future projects, as we value projects that have obtained master development plan approval. These downward revisions are partially offset by the positive effect of rolling our target price horizon forward to end 2023. We cut our 2022 forwards and 2023 forwards net profits after tax MI forecasts by 4.3% and 1.1% respectively, to mainly reflect our lower average selling price forecast for the natural rubber segment, as we believe the global supply might improve while demand is expected to soften over the short term. In addition, we cut our 2024 forwards net profits after tax MI forecast by 7.5%, as we are now more conservative about GVR launching IP land sales of future projects. For 2022 forwards, we forecast revenue of 25.4 trillion Vietnam dong, $1 billion, less than 3% year-over-year, and net profits after tax MI of 3.9 trillion Vietnam dong, $157 million, less than 5.4% year-over-year, as we expect operating profits will decline from a high base, while net other income will partially support the bottom line. We forecast 2023 forward revenue of 26.4 trillion Vietnam dong, $1.1 billion, more than 4.1% year-over-year, and net profit after tax MI of 4.4 trillion Vietnam dong, $177 million, more than 11% year-over-year, as we expect the rubber segments to recover and financial divestment gains to drive profits. Excluding our financial divestment gains forecast of 645 billion Vietnam dong, 26 million US dollar. We expect 2023 forwards net profits after tax amount of 3.8 trillion Vietnam dong, 133 million US dollar, less than 2.5% year-over-year. We believe GVR is a major beneficiary of surging IP land demand in Vietnam. Despite our conservative forecast for rubber land conversion compared to GVR's guidance, we believe GVR's valuation is attractive as the company has substantial land value to be unlocked. Downside risks to our positive boom, delayed development of future IPs, decline in natural rubber prices, delayed divestments from non-core assets. We apply a more conservative method to value GVR's land bank as we believe unlocking this substantial land value will take time and require clearer regulations from the government. In our valuation, we now include GVR's future IP projects that will be converted from its rubber land and have already obtained master development plan approval from the government, amounting to 6,000 hectares of rubber land conversion to IPs in 2022-2025 forwards, compared to our previous assumption of 20,000 hectares in 2022-2035 forwards. While rubber land conversion to IP developments has timing advantages and is supported by local authorities because the successful conversion will increase land values, we believe clearer regulations about conversion and developer selections are required. Rubber segments to face headwinds. We expect rubber latex prices to cool in Q4 2022-2023 from their recent highs in 2021 as the global supply will improve and demand will soften. Thailand, the world's largest natural rubber producing country, is increasing its supply of natural rubber latex. While China, the world's largest natural rubber consuming country, is still undergoing COVID-19 lockdowns. Therefore, we cut our ASP assumption by 1.5% in both 2022 forwards and 2023 forwards, and rubber latex GPM to 25%, 26% in 2022-2023 forwards, compared to previously 27%. Now we move to the 9 months 2022 recap. Net other income drives profit growth. Rubber latex. VCSC comments. In 9 months 2022, natural rubber latex revenue decreased 3% year-over-year to 10 trillion Vietnam dong, 403 million US dollar, which we believe is because export volume and ASP cooled year-over-year from their highs in 9 months 2021. Rubber products. In 9 months 2022, revenue from rubber products plunged 42% year-over-year to 1.3 trillion Vietnam dong, 52 million US dollar. This segment mainly includes rubber glove production from VRG Dinghuan. We believe the weak results in 9 months 2022 were mainly due to intense competition from other local manufacturers and weakened demand as the threat of COVID-19 faded. Net income from affiliates. In 9 months 2022, net income from affiliates it declined 26% year-over-year, 170 billion Vietnam dong, $6.9 million, representing 55% of our previous full-year forecast. We attribute a lower than expected net income from affiliates to one of GVR's major with affiliates, MDF, VRG, Dongwon, which we believe was mainly due to softer demand. Net other income. BCSC comments in 9 months 2022, net other income surged 82% year-over-year to 770 billion Vietnam dong, $31 million, in which compensation income was 325 billion Vietnam dong, $13 million, more than 143% year-over-year, and tree liquidation gains amounted to 332 billion Vietnam dong, $14 million, more than 27% year-over-year. We note that compensation income recognition in 9 months 2022 was mainly derived from rubber land conversion to the Vietnam-Singapore Industrial Park, 3 from GVR's 67% owned subsidiary Phước Rubber that amounted to 280 billion Vietnam dong, $12 million. And next, that is the 2022 outlook, higher net other income to offset lower operating profits. Rubber latex. We cut our natural rubber latex revenue forecast by 6% to 17.4 trillion Vietnam dong, $700 million, less than 2% year-over-year, which is mainly due to our lower ASP assumptions. We currently assume natural rubber ASP to decline 7% year-over-year to $1.4 per kilogram, which is partially offset by a 5% year-over-year increase in volume. We believe the global supply will improve as Thailand will increase natural rubber supply while demand is expected to be softened. Thailand is the world's largest natural rubber producing country. Meanwhile, China is still undergoing COVID-19 lockdowns. China is the world's largest natural rubber consuming country. Rubber products. We cut rubber products revenue by 19% to 1.6 trillion Vietnam dong, $65 million, less than 35% year-over-year, which is mainly due to lower than expected results in 9 months 2022 amid rising competition and decline in demand. Net profits after tax amount. We expect Q4 2022 profits to be mainly driven by net other income, mainly including compensation income from rubber land conversion to IP development, which is partially offset by a year-over-year decline in operating profits from core businesses. And let's go on to the Next part, that is 2023 outlook. We expect divestment gains to drive profits. Rubber latex. We forecast natural rubber latex revenue to rise 4% year-over-year to 18 trillion Vietnam dong, 726 million US dollar. We expect will be mainly driven by 7% year-over-year volume growth and partially cushioned by ASP dropping 3% year-over-year. Rubber products. We expect the rubber product segment to continue facing difficulties from rising competition and decreased demand in 2023 forwards. Wood processing. We expect wood processing revenue to rise 10% year-over-year to 4.3 trillion Vietnam dong, 173 million US dollar in 2023 forwards, as we foresee that demand for wood materials will recover after the destocking activities in 2022 forwards. Financial income. We currently forecast financial income will surge 80% year-over-year to 1.6 trillion Vietnam dong, 65 million US dollar in 2023 forwards, which is mainly driven by our assumed divestment gains from GVR selling a 20% stake in Nam Tân Uyên IP joint stock company that amounting to 645 billion Vietnam dong, 26 million US dollar, accounting for 40% of our 2023 forwards financial income forecast. Financial expenses. We expect 2023 forwards financial expenses to decline 17% year-over-year to 523 billion Vietnam dong, 21 million US dollar, which is mainly thanks to GVR's deleveraging financial position, as we forecast gross debt balance of end 2023 to be 13% lower compared to the end 2022 balance. Net other income. We forecast net other income to drop 34% year-over-year to 833 billion Vietnam dong, 34 million US dollar in 2023 forwards from a high base, which is mainly due to a year-over-year decline in net other income from tree liquidation. Net profits after tax MI. We expect 2023 forwards net profits after tax MI to be mainly driven by single-digit year-over-year growth in operating profits and a year-over-year increase in financial divestment gains. And now, I will share with you the valuation. We apply a sum of the parts approach to value GVR. We use a sum of the parts approach for GVR, as its earnings are driven by various businesses, including 1, the rubber segment, natural rubber plantations, and industrial rubber products, 2, the wood processing segments, and 3, IP developments. We apply an unchanged valuation discount 10% to reflect GVR's conglomerate structure, as well as limited access to detailed information. In this update report, we remove future projects from our valuation that have not obtained master development plan approved from the government. We use the RNAV method to value 6,000 hectares of rubber land conversion to IPs in 2022-2025 forwards, as previously 20,000 hectares in 2022, 2035 forwards. Our sum of the parts valuation includes, firstly, the rubber and wood segments, which we value using a 5-year DCF methods as cash flows from these businesses are relatively stable and predictable. The expected cash flows of this segment also include our old rubber tree liquidation and net income from affiliates forecasts. Secondly, the IP segments for which we use the RNAV method to value a total 21,000 hectares that is expected to be converted to IPs and infrastructure area specific, specifically 6,000 hectares to IPs and 15,000 hectares to infrastructure area. However, GVR managed an extremely sizable rubber land bank, 293,000 hectares in Vietnam. GVR's rubber land conversion to its self-developed IPs and for IPs for arm's length entities is highly depends on the decisions and master planning of the government. GVR's management guides for an ambitious plan of converting its rubber land to 10,000 to 15,000 hectares of leasable area for IPs in 2021, 2025, equivalent to a total area of 15,000, 23,000 hectares. Valuation summary. We increase our WACC to 16.7% compared to previously 13.5% as we raise our equity risk premium to 8% compared to previously 7%, cost of debt to 11% compared to previously 10%, and our beta for GVR to 1.5 times compared to previously 1.2 times, which is broadly in line with trailing 1-year weekly beta data. WACC summary, DCF valuation for rubber and wood segments, cash flow summary for rubber and wood segments, RNAV valuation for IP segments, WACC sensitivity analysis on target price. Comparable peers. We select regional natural rubber manufacturers and Vietnamese IP developers for comparison, as GVR has high exposure to the natural rubber and IP development segments, while GVR's earnings growth mainly comes from the IP segment. The company's rubber segment remains vital due to its significant asset allocation. It is difficult to select highly comparable peers as most natural rubber companies have diversified businesses. Our selected peers for GVR in the natural rubber segment are mainly in the later stages of the natural rubber volume chain, include the natural rubber processing and rubber product manufacturing segments. Conversely, GVR focuses on the early stage of natural rubber plantations. In terms of comparing, GVR to its peers in the IP sector. We believe the most widely used method to look at an IP company is RNAV. However, we do not have sufficient information to conduct RNAV for all of GVR's peers. Compared to a blended median of 15% of rubber manufacturing peers and 50% of IP developer peers. GVR is trading at a 50% premium in terms of TTMPE. Figure 10, GVR's comparable peers. Historical recommendations. Historical VCSC target price compares to share price. Actual price and target price. Financial statements. And that's bring me to the end of my presentation about GVR. If you want to open a legal trading account, please contact us with the information on the screen so that we can assist you. Thank you for your attention and see you next time.